Hello and welcome to the Thematic Edge, the podcast for thematic investors. I'm Marvin Barth of Thematic Markets, my institutional research product, and Seriously Marvin, my unvarnished, unconventional thoughts on markets, both of which are on Substack. I'm joined by a fellow Substacker, my longtime friend and former client, Mark Farrington. Mark, would you mind giving yourself a quick introduction?
Sure. Glad to be here, Marvin. I spent sort of first half of my career, 15, 20 years in Asia, initially as a strategist, central bank watcher, and eventually managing money, primarily leverage money, hedge funds for Bankers Trust and a few other institutional investors through the 90s and the subsequent decade. We ran a currency hedge fund. We ran a thematic investment process. We had a global brief, and basically all things were considered part of the investment process. So much so that I went back to university in 2014, 15 to get a degree in international relations because I had the view that geopolitical alpha was sort of the next big thing. And now we've integrated both the geopolitical overlay along with what used to be much more of a financial conditions and risk appetite overlay. So I'm a believer in thematic investing, and I love what you write on the Substack.
Thank you, Mark. This being our first episode, I'll give listeners a quick self bio, but I'd also like to relate a story of how we first met, as I think it will help motivate why they'll want to add this to their weekly podcast list. So, my full bio is available at both of my Substacks, Thematic Markets and Seriously Marvin. But the short story is that I was trained as an economist. I have a complete trifecta of policy stints. I started my career at the Federal Reserve, went to the Bank for International Settlements, and also was at the U.S. Treasury. I've worked across asset classes for both banks and asset managers as a strategist and an economist, and even as a short time as a portfolio manager. Now, I first met Mark when I was a currency strategist at Citi back in 2003, when my colleague, another strategist, asked me if I'd like to take the meeting with him because he was, quote, too challenging as a client. I accepted the challenge and I quickly learned what he meant. Mark is one of the sharpest and best informed minds in markets, and he pushed me to the limits of my knowledge and analysis in every single meeting I had with him. The difference is that I loved it. I never walked out of a meeting with Mark not having learned something new or having been given a new perspective on markets. Mark and I have been close friends ever since. That's been more than 20 years now. That's what I hope that you, dear listener, will get from our ongoing dialogue to gain a new perspective on the themes driving markets. Now, with that, let's dig into the content. And I'd like to start, if I may, Mark, with last week's Shanghai Cooperation Organization meetings and the 80th Victory Anniversary Parade in Beijing. Judging by the newspaper headlines and most of the so-called hot takes I've seen, Donald Trump has driven India into the arms of the Russians and Chinese and cemented the end of the post-war liberal order. Is that how you see it?
Well, that's a fantastic segue because I think you know how I probably would have interpreted the events.
We're
Um,
probably pretty aligned on that one, I think. I set it
yeah,
up that way purposely.
yeah, exactly. I think that my approach to these large, high-profile summits and geopolitical meetings is this. Normally, I try to understand, okay, what's the intention of the host country? What are they trying to communicate, project to the world? Then, secondly to that, what is actually going to be the response to this meeting? Not only in terms of implementing whatever communique they come up with, but I mean, what will be the counter reaction by all of the VIP guests, as well as all of those neighboring countries that view such events with sometimes whore. So in this case, I think this Victory Day parade combined with the SEO is a classic example. The SEO is a regional security organization. It's not the new global order. It's nothing like BRICS or G20 or some other sort of template that China has historically used to try to elevate an alternative to the either Western-led liberal order. It had a very specific purpose. It was to look after the conflicts and potential problems in Eurasia. And all that has really happened is that China keeps trying to expand that regional group to cover all of Eurasia.
Yeah.
It's not much different than what Russia did after all the sanctions were put on it in 2014 when it annexed Crimea and created the Eurasia Economic Union.
Yeah.
It started to try to recruit members as far south as India and as of course as far east as Kazakhstan and Tajikistan, etc. Because that area of the world was somewhat up for grabs after the fall of communism and the breakup of the Soviet Union, and China hadn't yet started to rise economically. But now it's fully competitively in play. Who's going to control and dominate Eurasia? Is it going to be India, China, Russia, or my favorite, Turkey? Because I think Turkey is the misunderstood power player in that area as
Yeah.
well.
Absolutely.
Asia Minor has always been the connective bridge between Western Europe and Eurasia. So
Not,
SEO
not,
was
not,
about
not,
that.
not only that, but the Turkic peoples all across the steppe of Russia, of Central Asia, all the way out to, frankly, Xinjiang, in China.
No, they're absolutely right. China's trying to resurrect the Silk Road. Nobody could be happier about that than Turkey because they're the other half of the Silk Road, you know.
Yes.
So yeah, so all of these dynamics are in play, and you could see one of the deliverables out of the meeting was that they converted a number of the observer status and peripheral memberships all into a single membership category now because, China wants to be able to say the SEO has 25 members rather than historically saying that had five. So, that was the intention of China, broaden the regional membership and make this a properly functioning regional security organization for Eurasia.
Yeah.
So, the press not so interested in that. The press is much more interested in what does it all mean, this rapprochement between India and China, and what does it mean with having, Trump, Xi, and Modi standing there together? Is that the definition of the New World Order, etc.? But these are all photo opportunities. These are all media optics, etc. They're not real. They're not concrete.
Yeah.
And Russia tries to do the same thing at the BRICS forums, So BRICS is sort of Russia's forum. It hosts, it dominates, etc. And it tries to turn it into something more, as it did in the last BRICS summit, trying to push for a new, exchange system, a pushback against American policies in general, and not just the Ukraine war issues, etc. And the rest of the countries nod kind of politely, but don't really sign on. The same is going to be true for the SEO. China is going to try to connect as many dots as it can, and the rest of the world will push back a little bit. I think the interesting question is, what is India going to do? India historically has tried to dominate the non-aligned movement, for example, historically during the Cold War, or now the global South. And you can see both China and Russia have tried to hijack leadership of the
Yeah.
global South. So I think one outcome of this is going to be Modi coming back to India and saying, we need our organization. We need to have our leadership platform. We need to, take back ownership of the global South. So you might see a whole wave of diplomatic overtures now for the next few years with Africa and South America trying to, dial up the South-South trade activity that Modi actually flagged in his speech. The one good comment that I've seen, I saw one Asian analyst write, and he compared the text of Xi's speech versus Modi's speech. And Xi's was dominated with New Global Order type of euphemisms, and Modi was very much talking, trade and South versus South type of activity. So I think that can be one outcome. And then the victory parade, I think will backfire, in my opinion. I had the opposite impression of most of the mainstream media, which was this is not something that plays well with China's neighbors.
Yeah.
And China has been a bully in the South China Sea, and
Yep.
there's a number of countries that are on high alert. So showcasing all that hardware, many people think that was a message to Trump and to the West. I think that played as a very bad message to all of the neighboring countries of China, which it wants to try to continue to convince that it's just part of a peaceful rise, and that was
Yeah.
anything but.
Yeah, I think as often is the case with you and I, we often end up in the same place, but I think via different routes. And on this one, I mostly have the same sort of views in terms of how it came out. The whole India thing, as you point out, India was a key leader of the non-aligned movement. They have been playing this game since independence, right?
Yeah.
Um,
Mhm.
and they always made a very clear point of sending their elites to go be educated, not just in the United States, but also in the Soviet Union.
Yeah.
So they have deep ties to both. Because the US was actually traditionally much more aligned with Pakistan, they always had Soviet weapons. So they have very deep relationships with Russia going way back when.
Okay. Yeah.
And, what I think has changed is that, um, they've fought a war with China before. They thought they'd gotten over it. Well, you talked about China being aggressive in the South China Sea. Well, they also invaded India in 2020, right? You know,
Exactly.
everybody wants to say, "Oh, Trump has bullied India into the arms of Russia and China with his 50% tariffs." I'm like, first of all, they were always in the arms of the Russians. They've always had a good relationship with them. That's the source of the Trump tariffs to begin with. With China, like, I don't know, maybe I'm off base here, but I think a country invading you and arming your arch rival with sophisticated aircraft and missiles that you just got in a small skirmish slash war with a few weeks ago is probably a little bit more serious than 50% tariffs because you're buying Russian oil. Maybe I'm off base there, but I'm pretty sure that Modi went to Beijing just as you put it, a photo op to say, hey, I can still negotiate. I can play both sides. But when the chips have to fall, Modi's going to choose the West. There's no question he's going to be on the opposite side of China. And I
Yeah,
think
that's true.
for to your point of the Victory Day parade, that I fully agree with you. And I think the two neighbors that are most important in that are going to be most concerned by that were India and actually the guy standing to the right of President Xi, Vladimir Putin. The
Yeah.
Russians do not trust the Chinese. It is a
Mhm.
marriage of convenience, largely because the West has pushed Russia into China's arms. And they have to be really scared watching all that go by and say, wow, they are not reliant for us on any military technology anymore in the way they always are. They're actually well ahead of us and they have infinite production capacity. This is actually getting really scary. If anything, if Donald Trump is opening the door to us to come back to the West, especially with a relationship with India, this is something I think Vladimir Putin leaps at, right? And
Yeah.
so I actually think that this was all a bunch of photo ops that, yeah, everybody's sort of playing around, but in the background, this was a huge win for the United States and its approach. And I think that's very different from the way most of the rest of the world is looking at it. The one thing I would say that I do worry about, that I do think was China's intent with the military parade, was showing, hey, don't mess with us. We are ready to take on anyone, including the
Yeah,
US.
that message was
Win.
emphatically clear.
And I think it was for the first time I saw in the press, people starting to acknowledge China will win a war over Taiwan. It's not even a question anymore. And so I wonder how that plays with some of the smaller countries along the east coast of Asia in the Western Pacific. Do they start to waver in terms of which side they want to choose there? Because China looks really strong.
Yeah, you touched on a number of important points there. Let's work backwards. That's sort of where my memory always goes. But
Okay.
yeah, for sure, I think there's no illusions within East Asia. Everyone knows that the war for Taiwan is just a way to burn a lot of life and treasure, you know. So China's ability to project power that close to its shore is perfectly well understood. I think that the Victory Day parade actually was aimed at projecting something much broader than that,
Yes.
because you know, and having North Korea there right on the side was part of that message, because China has also just proven to the world in the last 2 or 3 years that it can support an intense kinetic conflict, you know, thousands of miles away from its
Yes.
sphere of influence. So, you know, both China and North Korea have played an absolutely instrumental role in the Ukraine war, which is very far from its sphere of influence and has nothing to do with Taiwan. So this was, I feel, much more of a global projection of power, saying, if we build a new global world order, don't worry, we can potentially provide a security umbrella, something like the
Yes.
US, you know. I would argue a very different umbrella, an umbrella where we'll sell you a bunch of our stuff to arm you, but we're not going to send any troops. So that's point number one. And then the issue I think about a Trump win, I think the Trump win, if there is one, is yes, it makes it very clear where you need to draw the line. Not only do you need to separate Russia from China, you need to try to potentially accept the relationship between Russia and India. Because historically, Russia and India, that's north and south, the two important flanks of Eurasia, they had a communist cultural history past together. The Nehru dynasty were all promoting communist and state-owned economic policies. And as you mentioned, they bought all of their military hardware for Russia all through the Cold War. So an intelligent, you know, military tactic in this case would be for the US to say, let's allow ties between India and Russia to progress.
Exactly.
And just from Putin's perspective, his number one target when he launched the Eurasian Economic Union was to get India as a member. He viewed it, unless they got India and Iran, the union was not complete, because he needed that you know, service sector, high population, non-petrol consumption from the Indian Ocean border of his economic union he was trying to put together. So perhaps it can be emphasized to India that the relationship should be much more economic. Go ahead and join the the Eurasian Economic Union with Russia if you want, and adopt the standards, which is primarily a standards-driven customs union. But but you need to understand there's going to be firewalls between the type of military hardware we can sell you
Yeah.
if you're going to continue to consider Russia to be a primary military a supplier. So I think Russia and India should not be feared as a partnership. And the more important geopolitical objective for the US should be this division with China. So that can be a win if it happens. There's not a lot of signs to indicate that that's their thinking right now. And then just going back one last point about neighbors and how the optics of this appear to the rest of the world. I think, you know, in order for people not to become so afraid and not so reactive to this type of geopolitical theatrics. They really need to know the history and continue to study the history. So as you pointed out, yes, they have outstanding border issues, and China has intervened and threatened India on a number of times. And importantly, this kind of hijacking of the global South, I think, is where it makes it very clear, because the global South is about the low per capita income, the poor parts of the world unifying together, pushing back against their colonial past, etc.
Yeah.
And neither China or Russia fit that definition.
No.
And so they've tried to, in my opinion, put together the global South as a kind of voting bloc in the same way that they behaved in the United Nations, where they tried to collect all the poor people to vote as a bloc against the incumbent Security Council colonialists, etc. And I think India needs to split that, because that doesn't help them. I mean, they need to say, sorry, China, you're ahead of us now in terms of economic development, advancement, per capita income, etc., and military prowess, etc. You're not part of the global South. We're the ones who are looking after the poor. We're the ones who want to channel investment in the true South, South Asia, Africa, South America. And if they can win that rhetorical uh, debate, I think it's good for India, and it helps US policy. It helps provide a block on that level for China.
So, Mark, you know, you've been one of the best emerging market investors. In fact, was one of the earliest emerging market investors that I've dealt with across my career. You were into this well before everybody else. How do you see this playing out in terms of emerging market returns, in particular relative returns? What are we've sort of sketched out that we're both skeptical of at least what seems to be the consensus take on how the last week played out and what this is going to mean for the geopolitical alignment going forward. But what does that mean in terms of individual investments, or how you should be thinking about selecting investments across emerging markets and elsewhere?
Okay, excellent. Yeah, I think for me, we've been in a phase of negative geopolitical and geoeconomic backdrop for emerging markets, essentially since COVID. I think you wrote a lot about it post-COVID yourself, and your big pieces like Global Entropy and politics of rage, etc. All of these dynamics, which are I think you very accurately diagnose as symptoms of this declining, post-world liberal world order. These are the type of, issues which would naturally start to manifest and drive change. They're all negative for emerging markets. So, like you said, I'm an old emerging market investors, primarily because I started my career in Japan in the 1980s. And in the 1980s, Japan was the first emerging market. So everyone from the US and London were sending their, young new hires who were willing to take on adventure and move to Tokyo and capture the emerging markets in Asia, which was only Japan plus the four tigers. There were the investment universe was like five, and
Actually, it's amazing. I've made this point before in terms of this localization theme and
oh
rethinking
yeah,
emerging markets. That if you look at when emerging markets, everybody always tells you this story about their population growth and all this sort of stuff.
yeah,
Never worked. It worked for one window from
oh yeah,
1955
yeah,
when the Tigers take off through basically 2010, 2012. That's it.
spot on.
Before that, EM totally underperformed the West. And since then, EM has persistently underperformed the West. It was entirely about globalization and the West investing their capital in emerging markets, which is, you were, to your point, at the start of that cycle.
Absolutely. You just summed it up perfectly. So, globalization was the backdrop that the emerging markets needed in order to continue to perform. And I would say not only was it like a window of opportunity where everyone jumped in at the bottom, rode that wave and made a fortune. It was the opposite. They lost so much money repeatedly from 1995 to 2012 because we had the tequila crisis, we had
Yeah,
the Asian financial crisis, we
yeah.
had Brazil default, Argentina default, Russia default. I mean, everybody went to hell in a handbasket during that period. And the window remained conducive to risk taking, so everyone dusted themselves off and got back in again. So, like this rolling wave of risk capital kept coming into EM until the dumb money, which was passive investing in emerging markets, new index weights, which created, larger, country weights than the liquidity of the local markets could provide, et cetera. That provided this blow off in EM up to about, the peak in commodities, 2014. And ever since 2014, it has not been a positive risk reward trade at all. I mean, became a sort of a long short strategy. You got to pick the winners and losers. There's no longer this sort of structural EM versus DM type of passive trade you can put on. But in any case, so not only was the peak in globalization, which I actually pushed the peak back to 2008. We wrote a big piece after the global financial crisis that this is the peak of globalization because it's the peak of high risk adjusted external capital flow.
Yeah.
It's not so much
I don't
about,
disagree with that, but by the way, you
yeah,
could date it anywhere in that window from basically 2008 to 2012. 2012 is when the data really starts to turn, but to your point,
yeah.
that might have been, as I think you described it, a blow off top to the end of it. But yeah, exactly.
No, actually, it's a very important that period that you highlight because global financial crisis was a shock and viewed, in my opinion, not correctly as a US centric. And it was the first
Very good
considered.
point. Very good point. We could have a whole podcast just on that topic.
Would love to, because history has been rewritten so much. The understanding of the genesis of the problem
So
of the
wrong.
global financial crisis is completely deformed now. But in any case, if it had only been the global financial crisis, I don't think this loss of trust in the Western institutions would be so pronounced. But it was immediately followed by the EMU crisis.
Yeah.
So it was boom, US centric global financial crisis, Europe centric EMU crisis. And then that was it. China was like, okay, I'm stepping in. I'll take over from here. And fortunately, the commodity boom, lifted all the EM boats, and the EMs were like saying, yeah, we'll follow you, China. And then it all peaks in 2014-15 when China's growth rolls over and commodities along with it. But in any
It
case, that
actually peaks if you look at commodity prices, EM versus DM, their currencies, everything actually peaks in 2012. It's even 2 years before that. But
is it
you're
really
right.
okay. So
The whole 2014, 2015 is when they have to blow through their reserves, all of that.
yes, okay, yeah, you could be right on that. I have to look at which component there, but for sure, when China demand drops very sharply in
Yeah.
2014, then the commodity prices really come off. And that was the first moment I feel like when China did the kind of policy reflection that is more typical in the West, where they went back and looked at the level of monetary stimulus that they provided to their economy that period and said, "Oh, that was a mistake," and then they
Yeah, a
devalued their
50% expansion in credit in 1 year is kind of a hmm,
exactly, and then they devalued their currency, which is what always happens when you overuse monetary policy like that. So so then some healing process could have potentially happened between 2019 20, the shock from Trump's new national security strategy, identifying China as a strategic rival and putting up the first tariffs, etc., had played through. It was a mild shock, and there could have been a recovery, and then the whole world got hit by COVID. So I think it is really like post-COVID. EM just couldn't get up off the mat. It was trying to get up off the mat, and then COVID knocked it back down, and it's been that way since. I recently did a podcast with a think tank out of Nigeria called Kingsgate Institute, and the title of their podcast was "Investing in Economic Strategic Investing in a High Risk World." That's because the EM understands that we now live in a high risk world.
Yeah.
But it feels like this is one of those rotation moments where fixed income in particular is going to start getting directed to EM, and they wanted to know, are we going to have this big wave of capital flow like we had, back in 2011 and 12 from China and pre-global financial crisis when rates were low in the US, etc. And I was saying that, I don't think it's going to happen this time, but emerging markets as a FDI destination and as a growth potential is high. It's just not going to be portfolio capital flow driven. And I think that the sectors that need to be targeted this time around are also very different. So to relate this to SEO and these geopolitical risks that we've just flagged, even before SEO, you and I both talk so much about the bifurcation of the world. The EM, the previous non-aligned world, is trying to understand, how do I survive without picking a side and arbitraging the middle between the China ecosystem with its technological standards and the US and Europe with its technological restrictions on dual use, etc. And I argue that you should just not even attempt to. The way to avoid not picking sides and not getting involved in this entanglement on military and technology bifurcation is to focus on domestic industries. And the domestic industries that are so underdeveloped are easy to dial up, and they support growth. And the number one is the financial sector. So, this period of rolling crisis that we flagged from 1995 to 2002, particularly with the global financial crisis and the IMF programs, put the EM world off of investment in their domestic capital markets and banking sector forever. It was argued that having open capital accounts, large banking sectors, and deep capital markets created economic volatility and a gateway to importing external volatility that you don't want. And so there's been this kind of repression of the local bank and financial sectors. And I think not since crypto and digital assets have arrived has there been any, innovation and energy there, because it's just waiting to happen. There should be 10 large African banks that have big regional businesses that are incorporating all of this disruption to the traditional banking and making money. And those type of domestic businesses do not require you to take a choice between China or the US. This is about focus on your domestic demographics, good high return on investment type of domestic industries. And so I think that's the interesting part for emerging markets, not the cross-border capital flow. I think the currencies are going to be weaker, and the cross-border capital flow is not going to be very much. It's going to be modest and probably just in fixed income.
Well, you know my localization thesis, right? And that as automation allows you to increasingly outcompete labor with capital, there's no need for an outsourced supply chain anymore. In fact, it's actually less efficient and more costly. So you're going to see capital stay in advanced economies, and it's only going to go to those economies to the extent that there's a strategic resource. So I do think that it is going to be a critical issue in terms of which side you pick and which side comes in to develop your economy.
Yeah.
And I think that is going to be a critical issue. Absolutely. And you know this, I've been writing about this for a while. And this is one of the things I flagged quite a ways back, is that the US's best strategic play in exactly the issue that you just flagged, that you don't want to pick a side, and developing your domestic financial institutions, is to adopt stablecoins or some form of independent third-party payment system.
Mhm.
So you don't have to be on the U.S. SWIFT dominated one that they've sort of maligned and created mistrust for. And you certainly don't want to be on the Chinese one that's going to be very centralized that they're trying to do. So the best US move is basically a blocking maneuver to say, hey, we're going to offer you an alternative, which
Yeah.
is this different payment system that we don't control, and it's
Yeah.
and out there. And that was the Genius Act is going to go down in history as one of the greatest genius moves in foreign policy in world history because that was brilliant. It was
Named appropriately.
exactly. I thought it was kind of cheesy at first, but when you think about it, its long-term effects, it's actually really big. So, look, I don't want us to go on too long, and I think we have covered quite a bit there. But that point about there is a sort of framework to think about all of these things and the U.S. approach to what I've described as global entropy, this diffusion or dissolution of the post-war liberal order. And for those who are interested in it, I'm actually re-releasing that series on a serialized basis this week and next week. So go to Seriously Marvin. It's there. But you published something this last week that was one of the best things I've seen in a very long time. And I I'm not giving you credit for only giving you credit for flagging it because
Exactly.
like there was something somebody else wrote or actually said, and this was Deputy Governor Himino at the Bank of Japan, and this
Yeah.
is far and away simply the best summation of Trump's overall unified policy I've seen certainly from anyone in the official community and any country, and
Mm.
probably one of the better ones I've seen overall. Can you just like talk me through Himino's and explain to our audience what Himino said? And by the way, for those of you listening, go out and read it. It's like what, 5, 6 paragraphs long. It's not a long speech.
Yeah, it's just the
Absolutely
preamble
brilliant.
to his speech. Yeah, absolutely. So, mentioned I started my career in Japan as a BOJ watcher. I was the first foreign BOJ watcher there in 1986, and the Bank of Japan took me under their wing and guided me and taught me, how to represent their monetary policy, how all the internal constraints of the organization produce the outcomes which kind of look, boring and archaic from the outside, etc. So I've always understood the DNA of the BOJ, and then I have such high respect for the staff of the BOJ, like you do for the Fed. Nobody works harder. Nobody's
They are
brighter.
fantastic. I
They're
dealt with
they're
them
fantastic.
for
But
years. Yeah, go
what
ahead.
you're allowed to publish and what you're allowed to show is another thing. So
Yeah.
unless you know it from the backside. And so Deputy Governor Himino, I love to read his speeches. I know that his view reflects the staff view. He is a long time internal leader coming up through the ranks through the Bank of Japan, so widely respected. And I'm sure that preamble to the speech was a team effort because I know the language he typically uses, and the language was different this time around. So very impressed that they pulled this together. And as I wrote in my published piece, I normally spend a few lines criticizing the BOJ for focusing too much on US policy rather than their own domestic and economic policy. Because to normalize rates from -2.5% real rates when inflation is, 1.5% above your target doesn't require a lot of external analysis. This is internal stuff.
This is another podcast we're going I'm writing off a list of things we're going to have to come back to. BOJ
Okay.
policy, definitely.
But as always, you start to read the speech, and the first paragraph invariably is always about the U.S. and the uncertainty that it's
Yeah,
causing. And he then laid out this synopsis of what the Trump strategy is, and with the correct tone, which is not to criticize it or not to be angered
yeah,
by it or call him a bully or whatever, but just to try to understand their modus operandi. What are they trying to do so that we can incorporate that as
yeah.
an external background factor? And he just nailed it. And he nailed it for a lot of reasons. And this particular Substack publication has by far been my most popular one. I think I got 400 new subs over like 3 days. I mean, it's really kind of spread around. So people are having the same reaction that I did. Something written so well and articulated so well and in such a balanced and mature.
Yeah, so sorry to interrupt, but I think I've told you this before, but another friend of mine in a very different sphere from us, actually in the
Yeah.
defense world, just
Yes.
last night, I was on a call with him, and he he flagged this speech out of the blue and said, "Have you read this thing? It's amazing."
Yeah, no, you can't be affected by it. It's just so out of the blue from a central bank staff speech. It's hilarious. But anyway,
Unbelievable.
what I loved, I think we both like the fact that he identified well that the Trump strategy is holistic. It's
Yes.
viewing the domestic battle and the international battle as one and the same. And I think a lot of people like that point. But I was actually very happy by another passage in the paragraph, which was about the Trump administration is not encumbered by orthodoxy or previous
Yes.
precedent. Because I just wrote a piece about this last week. People freak out on everything he does as if he is obligated by law to follow precedent and to
Yes.
use the same terminology that has been used over and over again in the past, etc. So this constraint, this straitjacket that precedent and orthodoxy has been placed on politicians for centuries. Trump has just thrown it out the window from the beginning and saying we're not going to be constrained by anything because basically we feel it was all corrupt, rotten to the core. We're draining the swamp. We're abandoning agreements that were taken under false pretenses and with ulterior motives, etc. Clean slate type of stuff. And I think too much of the mainstream press gets consumed by this analysis of break of precedent
Yeah.
or change of language, etc., instead of the actual essence of what the announcement has been. And I think he nailed that. And the other point is he nailed it. It's not. He said the Trump administration is willing to pause. It's willing to backtrack. It's willing to sidetrack and reconsider, and then move forward again once it has consensus, etc. Rather than using terms like blinking and taco and capitulation and who won and who lost, etc. It's just normal language about pausing, going forward, backtracking, adjusting. And so
Frankly, the way
I
we would
just,
describe a central bank's policy. Oh, they're pausing. They're
oh,
recalibrating.
maybe that's it. That's a good call. Maybe that's where
It
that reference
is.
came from. But so those things are the two that were most important to me that show that he got it. And the way I concluded it to affect monetary policies is just simple. I think that level of understanding should lower anxieties and allow the BOJ to be a bit more relaxed. Trump isn't off the rails. The tariff policies were shocking. Japan does have an agreement now in place. It's not going to be a continuous pipeline of disruption. Okay. And so now we can get back to our task and focus on normalization. That was my interpretation, which remains to be seen whether that's correct or not.
Yeah, I think that's a spot on. I just thought it was worth highlighting because that speech was just so perfect. It's summarizing exactly what, if you don't think that there's a Trump strategy, read that speech. You know, it's true. The man himself is not the best spokesperson for his strategy, but
Exactly.
Himino absolutely nails what I seem to see, or what I, as an analyst, look at the broad swathe of different policies and say, this is how it fits together in a clean strategy. And I think there is one there. I do want to
Mhm.
come back to this point. As you know, I'm politically a small c conservative, right? This idea that we shouldn't just go out and break eggs or try something new just for the sake of it. Like, thousands of years of human history do teach us something. We should probably stick with that unless there's good reason to break, right?
Yeah.
And so, to your point about Trump, I do think that that is what's quite interesting here is that um, you know, there is a point at which you do say, well, we've been trying this for a while and it isn't working. Maybe
Yeah.
we should stop and try something different. That's when a conservative does change. And it's not that conservatives are immune to change, it's that you have to have a good reason to. And the fact is that the West has, it's fallen behind militarily. Its economies have been in terrible situations. Its working class have been destroyed.
Mhm.
Um, you know, it is on the verge of falling behind technologically in various areas. It is actually quite clear to say China is ahead of the West technologically in various areas, not in all, and
Mhm.
is a challenger in most. And you got to think, well, maybe we should try something different. And I think there's also this broader issue of this sense that this really gets to the heart of what I've called the politics of rage, or other people have called populism, which is this sense of disenfranchisement by average people, that elites effectively live by a different set of rules from others. And I think a lot of the reaction that you described in terms of, oh, you can't break that rule, they're all the things that effectively have protected elites, or um, are related to elites' specific interests. And I define elites broadly here, and I'm not trying to play class war or whatever, but elites inhabit both a monetary phenomenon, a wealth phenomenon, as well as a political clout, as well as bureaucrats and academia, all of whom have carved out little fiefdoms that they are trying to protect, and that frankly the Trump administration is attacking. And I think one of the ones that's most important for markets right now, and I think um, I am definitely of two minds, but I'm interested in your thoughts on this, is what's been going on with the Federal Reserve, right?
Mm. Yeah,
Um,
good talk.
and the attack on Jerome Powell and his policy and leadership, right down to construction of buildings and things like that. But then in the last 2 weeks, really stepping up and pursuing a criminal investigation of one of the governors
Yeah.
over these mortgage issues. As I said, I am of two minds, but on this one. But where do you stand on this, and how do you think about U.S. rates and the dollar in this environment?
Okay, good. That's a good topic. I'm going to say something to shock you. I'm going to give the elites the benefit of the doubt for 2 seconds before I jump into the politics of rage. My take on rules are not necessarily written to protect the elites. The rules are written, and the elites are educated enough to read the rules, understand them, and then know how to arbitrage them, work around them, exploit them. Whereas the general population doesn't bother normally to read the fine print and understand the rules and learn how to exploit the rules to their advantage. I see that as the primary difference. So when you identify rules that are producing bad outcomes and you want to take them away, of course, the elites are the ones that are going to get hurt because they've invested all this time building up
Yes.
offshore companies or tax structures to avoid it, etc. And of course the working class doesn't have that luxury. So I'll just say, okay, elites, you didn't create these rules artificially. You just understood them and you've been exploiting them. And now these rules are being taken away from you. So, don't cry over spilt milk. Just move on. That would be my advice. But as it relates to the Fed and to this particular issue with the governor, um, my problem is that I feel the central banks have grown into some sort of bizarre monolith over the last 15 years that needed to be taken down anyway. Did I ever imagine it would be done this way, which I consider primarily to be an HR issue, where someone, lied on their forms to get the job or purposely omitted an infraction? Uh, no, it shouldn't happen this way. But I think Trump, he's letting everyone know that he was treated badly the last 5 or 6 years, and people brought up technicalities to try to discredit him and arrest him, etc. So he's just saying, it's not very pleasant, is it? But I don't think he is doing it with the same malice that the rest of the world did against him. I think he's just saying, doesn't feel very nice, does it? But then if we do focus on the Fed definitely needs to downsize its mandate. It definitely needs to get back to a narrow central bank that existed before the global financial crisis. Building a $3 billion building complex is kind of optically and symbolically pointing in the opposite direction. A better headline would be the one like from the FBI, we're moving out of the Hoover building and downsizing. So the trend across Washington was downsizing,
If
and then the Fed is
if
doing
they
the
can
opposite.
detonate the Hoover building as well, it is the worst eyesore in Washington. But
Okay, well, let's forget, ugliness aside. My point is the theme was since Dodge arrived in DC, the theme has been downsizing. So unfortunately, Powell has to deal with the optics of the Fed going the opposite direction at the same time as downsize. So I put it in that category. But to get to the point that the markets care about, is the Fed's independence being challenged? I don't view it this way. Like the oversight committee and the congressional testimonies that take place, the Fed needs to be constantly criticized by its oversight in order to keep honest. I mean, that's the only check and balance we have for an autonomous central bank, and it has been performing poorly. And I have never been a fan of inflation targeting. I predicted many years ago that as the world converged on very similar inflation targeting regimes, that it would take 10 years of bad outcomes before they all one by one started reviewing, abandoning, and amending, because I knew it wouldn't work. You cannot.
I can testify this. I think you've been saying this for 20 years, and you were right.
That's exactly. So now the day has come. I'm so happy. The BOJ did a monetary policy review last year, analyzing, whether the externalities from all the alternative monetary policies was a net positive risk reward or not. The Fed has now adopted this 5-year rolling revision of its long run goals, which it thankfully has just amended. Powell spoke to that at the Jackson Hole speech. I was highlighting that about not tolerating inflation overshoots, etc. So I think that review is in the air, and that's the right atmosphere to be in the air. It's not about undermining independence. It's about a very needed review. One of the reasons gold is through the roof, and one of the reasons that cryptocurrencies were created to disrupt, is because the central bank and fiat and banking system at the core was producing poor outcomes. And so we need to mean revert somehow.
Yeah. I said I'm of mixed views. Look, there's a part of me that you go back to what is the sort of mandate of the politics of rage, which, Trump has largely embodied. And it was about leveling the playing field between elites and average citizens in society. And, we have seen just far too much that elites get, a slap on the wrist
Yeah.
where the same thing somebody else would lose their job, go to prison. And so in many senses, a lot of the things that people in the press, in the commentary, otherwise, a lot of the bureaucracy have been incensed by. I've said, well, look, no, that person did wrong. They should leave. I mean,
Right.
one of my favorites was you brought up Doge, and I remember just every single, one of my former colleagues from the federal bureaucracy on LinkedIn was decrying that the head of the payments at Treasury, this longtime career staffer, had resigned because he
Yes,
couldn't
I
deal
remember
with
that.
Doge. And I'm like, you go back and look at the guy's record. They had a 5%, not 0.5%, 5% payments failure record in terms of making erroneous payments.
Yeah.
At any company
Trackable
in the world,
offense.
that guy would have been gone years ago.
Exactly. That's my point about the criticism. Like it's not a private company, and you won't have the same sort of
Yeah.
hard
And
HR outcomes unless you have external criticism.
yeah, exactly. And I think in the Lisa Cook case, the alleged infractions on her mortgage misreporting, if those occur, same thing is going on here in the UK with Angela Rayner and the stamp
Yes,
tax, right? And they're
exactly.
talking about her having to potentially resign because of this. To
Yeah.
exactly your point, this is something that Jerome Powell, as chairman, should have had investigated and should, if she's found to have violated the law or even acted in a way that was not appropriate for someone of her position as a regulator, she
Yeah,
should be removed by Jerome Powell, right?
exactly. It's
And
an
I think
HR issue. It
it
should
is
have
an
been
HR
handled
issue.
internally.
But I think there's a broader issue here. I mean, this is why I'm of sort of two minds, is that, look, I absolutely agree with also the bigger picture point that we've kind of lost sight of these are bureaucrats who ultimately report to the US taxpayer, and they have to
Yeah,
do their job well.
yeah.
And I'm sorry, I've written about it all over the place. You can read it in my research over and over. I think Jerome Powell is one of the worst Federal Reserve chairs in history. He
Ouch.
should go down as such in history. He should resign because he's that bad, right? Um, and by the way, I think rates should be higher, not lower. So I'm not on Team Trump on
Yeah,
this.
I agree with you. Yeah.
But um, you know, I do think that we need more oversight. And unfortunately, we've developed this attitude that seems to be, no, these people are beyond reproach. You can't criticize them because they're independent. No, they're independent to pursue their policy. But if they're not doing their job, and I'm sorry, the Fed has not done its job. Under Jerome Powell's tenure, his average inflation rate is one of the third worst in the entire history of the Federal Reserve. Okay, so no, he failed. And
Yeah.
there's all sorts of malignancies associated with the size of the balance sheet. Now, some of those he inherited, but he expanded.
Yeah.
So there's a lot there. That said, I am worried when you go after criminally one
Hmm.
of these people, what message did that send to every other single member of the FOMC, right? That, oh, wow, they might come after me next. And I do think that's one that really does concern me here. And, if you look at, I've been saying because the Fed, I think, was doing a bad job, that the back
Yeah.
end treasury curve should take off. And you also have the fiscal situation, all of those things. I've been saying that for the last 2 years.
Yeah.
But it does seem like, um, you know, if you look at what's actually interesting is you had both swap spreads, long dated swap spreads, and the 10s, 30s spread really take off in the slope of the 10-year, 30-year slope. Um, Ever since Liberation Day and throughout this administration, the swap spread has started to close recently as people start to realize that tariffs are actually going to create a lot of revenue. But
Well,
what's
also
interesting,
you saw how CDS
continues to see,
blew. Remember when CDS blew out
yeah,
in April after whatever Moody's downgrade and backlash against Dodge and all this sort of thing?
yeah.
That hump's completely gone. It's mean reverted and pushing down to lows now. So those I don't know. Those market reactions, I don't feel like they have much substance. They're really transitory, kind of.
That back end steepening isn't. It keeps going. And I think part of this is
What keeps going? Sorry,
the back end steepening, the
at the back
10s,
end.
30s, that is at new highs for this cycle. I mean, I think I can't remember exactly how far back, but it certainly goes back uh, um, uh, at least 5 years, maybe longer. So
Yeah, I think
that
the back end movement globally is really quite logical. Okay,
yeah,
so
I
the,
agree.
the great moderation implied flat yield curves, and the
Yeah,
great moderation is over. So if you go back and look at the slopes of yield curves through the 90s, where we actually had kind of a choppy business cycle as well as a choppy inflation cycle, steepeners were big trades. And they overshot just like every other trade. So I actually think steepeners, they're not going to go one direction without a correction. But
yeah.
if I'm a bond market trader now, after a period of flattening, a good risk reward trade is to catch the next steepening move because it's going to be much more dynamic than the flatteners. I think the flatteners are grinders and the steepeners have some acceleration to them. And I think that will continue for as long as we're in this environment of geopolitical structural change, wholesale review of our economic decision-making institutions, relative competition in markets that had previously been, compressed by globalization, et cetera. So steeple yield curves, wider spreads. It's actually bringing back profitability. I don't know if you have looked at banking stocks, but like banking stocks in Europe and the US, they're grinding and shooting higher now, and it's mainly, net interest margin driven. Like steeple yield curves, are good for banks. We're back to making banking good business again. The flattener was a killer for everyone. We had 2 decades of it. I'm happy to see it gone.
Look, Mark, I'm sorry. I was trying to look on this other screen here at this 10s, 30s spread, and yeah, we're at the highest in about 4 or 5 years. But that was because the curve was basically pinned at zero
Exactly.
early on. But if you go back and compare it to, the 2000s and the 90s, we definitely had much steeper 10s, 30s back then. So yeah, you're right. It's not fully in any sort of worrying territory now. I do see some worrying signs. That's why I'm sort of mixed minds about this whole Fed thing. I think we're going to have to cut her off here. We've been going a little over
Okay.
an hour. This has been fun. It's
Yeah.
always a pleasure to talk with you, and we're going to do this regularly, right? We're going to do this, I think, weekly from now on or something.
Whenever it makes sense for the great thematic markets, I'm happy to come
Or the
along.
Global Watchtower.
It's just a
Um,
chance to
yeah,
brainstorm,
yeah. So we're going to be cross-publishing that on both things. So make sure you tune in regularly. And I've got a whole list. We've got to go back to the real causes and story of what really caused the global financial crisis, BOJ policy. What lessons we can learn from the 90s here. And I also think, to your banks thing, we could have a whole long conversation on stable coins and
yeah.
what's going to happen with this. So I think that's a lot of interesting topics we're gonna get to, as well as what happens along the way. So thank you
Yeah,
very
good
much, Mark,
topics.
and I look forward to doing this to you again.
Okay, thanks, Marvin. Thanks for having me.